Everybody, it's no secret that real estate prices have been on the rise for the last couple of years. February, March, April of last year, I had clients and friends asking me, hey, will prices keep going up? And recently we've had that same discussion all over again. So I wanted to take it just a quick minute, show you a few charts to let you guys know what's going on out there in the Southern Indiana real estate market and across the country. All right, so here you have it. Prices are on the rise. Here's a 12-month price change that was just released from the Fair Housing Authority Price Change Index, okay? So they got it broken out into regions. In the blue bar, you've got prices from February 20 to February 2021. In red, you have February 21 to February 2022. And then you've got the regions across the bottom. So for the entire US, prices are up 19.4% for the year. If you take a look at the region that Southern Indiana would be most closely associated with, that's the East South Central region that contains Kentucky. 20.8% price change, price increase. Can it keep going from there is what people are asking. Can prices keep going up? Maybe is the answer. I don't have a crystal ball, but I want to show you a couple of things. Why are prices going up as much as they are? So let me show you a little bit more data. This is the Southern Indiana Realtors Association MLS database. And if you look here, I've got active homes in Clark, Floyd, and Harrison County. Those three counties make up probably 90% plus of the houses that sell every year in our market. So if you take a look at those three counties, there are only 308 active homes as we speak on April 26th. 308 homes. That's from Corydon, Indiana, all the way to New Washington, Indiana, and upwards close to Pekin. So you've got about a 40-minute drive from the river in Jeffersonville, Indiana, and there's only 308 homes. It's inventory, folks. There's just a lack of inventory. So where is this inventory? Why are we having such a difficulty with housing inventory? Well, one piece of that puzzle comes from a report released today from our friends at Calculated Risk newsletter. And I want to show you this. This is new home inventory. New construction homes are divided into three different categories. Completed homes means they have a certificate of occupancy from their local governing body, either the city or the county. The house is finished, it's completed, it's ready for you to move into. Under construction is what it sounds like. It's still being built. And then not started. It means they have a permit to build the home. They just haven't started building it yet. So take a look at this home. Completed in red, under construction in blue, not started in green. And so here's a couple of notes from Calculated Risk. The inventory of completed homes for sale at 35,000 is up from the record low of 33,000 in 2021 and early 2022. So a little bit of an improvement in the completed houses that are for sale. But this is still about half the normal level of completed homes for sale. Now listen to this. The inventory of homes under construction is at 267,000. That's the highest level since 2007. And the inventory of homes not started is at a record 105,000. Why is this happening? Well, it goes back to supply chain, not being able to get material prices on the rise, and difficulty finding labor, finding those people who will actually come in and build the homes. So this is a concern because the inventory that we need to help loosen up this market is either under construction and it's being delayed, or they have the permits for it, but it's not being built. So inventory for now is going to still be squeezed. This is where we should start seeing more houses come on the market, but that inventory is still being squeezed. So can prices keep going up? The inventory is not there, prices will continue to rise. Now, what's the wild card? Here's the wild card that we've been looking at, and you may have heard of it. Mortgage rates are on the rise. Look at this chart showing back to, let's call it September 6, 2021. 30-year fixed rate was 2.96%. September 6, 2021, 2.96%. Today, we're tracking 5.28% on average for a 30-year fixed mortgage. Folks, we're getting close to that doubling mark. So again, will prices go up from here? Inventory's not there, says yes. Mortgage rates on the rise, says that may soften. Too many moving parts here. But if you're thinking about selling, you want to capture the top of the market, you're going to want to think about doing that sooner than later. If rates continue to rise, Federal Reserve is anticipated to raise the Fed funds rate several times throughout the rest of this year. So we're going to expect mortgage rates will go higher from here. If you're a buyer, prices could keep going up for the foreseeable future. A lot of it's just going to depend on those mortgage rates. If you have questions about buying or selling a home in Southern Indiana, reach out to us, 812living@gmail.com, 812living@gmail.com. We'd be happy to help.